Hey, good morning, everybody. It's Friday, March 6th, 2026. I, of course, am Hammer from Hammer Solutions, founder of Originator Success, Grab and Go Social, and Rate Sensei. Three great products to help my originator friends get more business in 2026. Good morning, y'all. So glad to have you here. So glad you could join me. Remember, you can join me live each and every weekday morning, 9:30 a.m. Eastern Time, as we come broadcasted to you on Facebook and YouTube. Today, a lot to talk about. We got the BLS jobs data, big miss, but it doesn't matter. It didn't matter. We'll talk about what's going on with the Fed outlook on rate cuts, oil prices, the Iran situation, everything that's going on. So much to talk about today. Remember, if you don't want to miss a moment of the show, sign up for our text reminders. Get a quick text as I'm going live so you don't miss any of the action. hmmr.io/reminder or use this cool QR code over here. Also, don't forget to sign up for our Rate Lock Advice, www.ratelockadvice.com. That's an email to your inbox each and every weekday morning. And don't forget to sign up for our text alerts at www.ratetextalerts.com. Let me show you for a quick moment how important it is to be signed up for these. Let me go ahead and let me share this. I don't like the way it does that. Let me go full screen so you get it. All right, so take a look here. Let me move this up a little bit. Oh, it doesn't let me move it. All right. So anyway, yesterday we said consider locking the 10-year. Let me put Presentify up so that here we go. Okay. Right here we said consider locking 10-year yields still rising. Oil prices are too. And markets are giving up on any Fed rate cuts this year as inflation concerns grow, no matter what Warsh says. Tomorrow, BLS jobs data, but what could it do to possibly push rates lower, even if it comes in weaker? That's what I said. Even if it does come in weaker, if traders panic, it's only going to get uglier. Don't get caught chasing last week's rates and regret not locking now. That was what I had said, and I got to tell y'all, unfortunately, that is where we're at. So I will give you some more info on that in a moment. Looks like everybody is jumped on, so we'll go ahead. Let's go ahead and get started. Quick recap on what happened yesterday. I'll show you all the technicals in a minute. Yesterday, bonds ended the day flat, though. That was about as close to a win as you were going to see these days. Forgive me. Rate sheets today, likely, I like showing it with the screen. I'm going back to my old way. I like doing it. I think it makes more sense when I do that. So bear with me. Let me pop this up for you and show you here. So we'll put this on today. Let's zoom in on this. Let me zoom in a little bit here and show you all this. So as far as yesterday went, bonds were about as flat as you can get. Pricing came out here, ended the day at almost the exact same spot. Really not a lot of volatility through the day, a little bit of movement, no reprices, but really not much of a win. If you take a look here, let me refresh this so we get the cleanest version of the chart. Yesterday, we were at 99.80. We were down about 15 basis points. We ended the day. Again, you can argue about testing the technicals, but the technicals don't matter right now. I can't stress this enough. Looking at the technical charts, it's fine, but you got to look at the fundamentals. And the fundamentals are the military action with Iran, and that's going to trump everything. I probably shouldn't even use that word anymore because it probably got misaligned. But anyway, rate sheets today are going to be worse, no doubt about it. Let me go ahead and adjust this to the size of the screen. Let me move this real quick. This is Partesian, my favorite little program there. All right, taking a look here. Man, I can't stress to you enough. We have had such luck. We, of course, came down on the 27th to some of our best pricing of the year, best pricing in a few years, actually, right? Arguably 5.99. We bumped up on Monday, and we knew this was post Iran conflict, right? 6.1213, 0713. Arguably, this week, according to rate sheets, much better than what we see this morning. Though you're going to see a big jump, at least an eighth of a point. Should be up to about 6.25 right now. Again, yesterday I really did stress the fact consider locking. It's just that's where we're at right now. I'm going to throw this up on the bottom of the screen so you guys have it. You need to be locking for protection. Only float what you have to float right now. Today's going to be a bad day, but what do you think is going to happen over the weekend that's possibly going to make it better? Right? That's what we have to ask ourselves. We can't get caught chasing rates. We can't get caught chasing pricing. It's gone for now. Will it come back? Eventually. But we don't know when. It depends on how all of this stuff plays out. So let's go ahead and keep going, though. Jobs data, it was a huge, huge miss for jobs data. We were minus 92,000 jobs. We were actually negative jobs created. They were expecting, I think, 50,000 jobs to be created. We were minus 92,000. That's a difference of 142,000 jobs. In a bubble, if we did not have this whole thing with Iran right now, we would be seeing, it would be amazing. It would be amazing. But that's not the case. So, the unemployment went to 4.4%, was expected to stay at 4.3%. This is probably one of the more accurate BLS reports because we all know that there's problems in the labor market. Even the ADP data that came in positive this week showed that it all came in healthcare and education, right? So we know that there is a excuse me. We know there is a labor market problem, and this was probably the most realistic. Now, if we didn't see an Iran situation, we'd probably see mortgage bonds up 30, 35 basis points right now. We'd see rates down 1/8 of a point, maybe even 1/4 of a point. But that's not what we're seeing today. What happened today, take a look at this reaction. You can see it right here on the screen. I'm going to go ahead and get rid of the third for a minute so we can go over it together. Take a look. Mortgage-backed securities were down quite a bit to start the day. We got that jobs data, 8:30. Look at this. Huge spike, instant reaction. That's what you would expect to see when we got data this week. However, this, instead of staying up here and going like this, it went right back down. And now here we are on the lowest levels of the day, down 23 basis points on the day. That just shows you a big part of that, and the why on that is oil. So this is ICE Brent crude. ICE is the trading, whereas Brent crude prices are the actual prices if you own the oil, right? So ICE Brent crude, trading oil is trading at $90 a barrel right now. You can look at different things. It can be very confusing when you follow the oil stuff, by the way. Like here, Brent crude. If you look at Brent crude oil prices, it's $85. But yet, again, what did I just say about this here? ICE Brent crude is 90. And this guy kind of sums it up when he talks about it. What's the difference between Brent and ICE Brent? And it has nothing to do with immigration. Many people hear Brent crude and ICE Brent and think they're two different types of oil, but here's the truth. Brent crude is the actual type of crude oil, one of the world's main benchmarks for setting oil prices. Remember, when it comes to U.S. oil, it's WTI, and WTI, that's our American pricing right here is WTI crude. So, but anyway, ICE Brent is simply the futures contract for Brent crude that's traded on the Intercontinental Exchange. In other words, that's the financial product investors and traders use to buy and sell future prices of Brent oil. Brent is the oil itself. ICE Brent is the trading version. Think of it like this. Brent is if you're buying real oil. ICE Brent is if you're trading oil prices without the trading of physical oil. So hopefully that makes it. It doesn't really matter which one of these. It's kind of like saying which coupon we're going to look at. Doesn't matter which one of these we look at. They're all high. They've all gone up. They're all continuing to go up. And one thing that I've been saying to you this entire week is that as oil prices go, so shall mortgage rates. Oil prices are moving higher. Rates are moving higher. As we head into next week, neither one of those things is likely to change. And right now, I mean, I've really got to say that based on the activity from this week, being up yesterday, being able to lock in about 1/8 of a point worse, maybe a 1/4 point, and today definitely around a 1/4 point worse, that's not terrible. That's not terrible. With what we have gone through and what we're going through, that's not terrible. Now, some other things that we had to go through, let's see. Reprice risk on the day is moderate. Bonds had a short-lived, very, very short-lived rally right here after the jobs data, and it was gone. And now we've seen, I'll bring this up to screen a little bit so you guys can see the bottom of the chart a little better. So we take a look here. We're seeing it continue to drop down. My concern here is that this absolutely could turn into snowball selling, where it continues to get worse and worse and worse. Right now, we're down about 25 basis points. If traders panic, and they're on the edge of panic, we could see this continue to drop down. Now, depending on what happens over the weekend in the headlines in Iran, that's going to make things even worse from here. So we started the week, kind of let's recap, right? Let's kind of look at where we were all together. Is that we started this week looking at, hey, we've got military action. We expected, a lot of times people say, isn't military action? And yeah. All right, let's go to your comments and then we'll talk some of this stuff. Einkorn said, today I'm hearing take today off and have some tacos and tequila. Absolutely, my friend. And you're going to have to practice your scripting, y'all, because consumers, everybody's going to go through the Kubler-Ross model, the 5 stages of grief, where they start to go through this whole process of denial and anger and bargaining before they get to acceptance. Like these are the 5 stages of grief. And that's what happens when rates move higher. You're, of course, going to have your refis freeze up unless they've got a lot of debt and they need to get it done just to breathe. They're going to put the brakes on things. Nobody likes to miss out. Everybody has FOMO, fear of missing out. And that's really what this is. If you had told somebody, 3 months ago that they could get a rate at 6.25 when rates were at 6 5/8, then of course they're going to jump on it. But once they've seen 5.99, 5.875, 5 point anything, nobody wants rates in the 6s, right? So you're going to have to really practice your scripting on this one. Randy said, since my whole pipe is locked, I want stability now so I don't have to justify the locks. Yeah, I don't think you're going to have to worry about that, my friend. I think it's going to continue to get worse from here. That's just the way the writing is on the wall. And I'll use that as kind of an opportunity. Let's go back. So on Monday, when we woke up and things were bad, they weren't terrible bad, but they were bad. And we said, hey, let's see if we get some settling in. Markets usually have an overreaction to this stuff. Let's see how this goes. Also, we didn't know if this was just some initial military action or now it's proven to be a longer term military action. And Trump had said 4 or 5 weeks, but who knows if 4 or 5 weeks doesn't turn into 4 or 5 months. This is the same thought that's going through traders' minds right now and why you're seeing everything happen. They're going through the same process. They're looking at everything the same way. Sean Segeloff locked a guy yesterday, discussed risk versus reward, where he wants his payments to be. Today, I'm getting more calls for equity lines. People are drowning in debt. They are. So there's still going to be business out there. Mike Tebow, CNBC said today that you need between 50 and 70,000 positive jobs to show zero growth. This is down from the 100,000 it used to be. This is not the birth-death model. This is people quitting and retiring. Yeah, we're going to see so much of this stuff is wrong now. It really is. We don't, between gig economy and the internet changing the world and so many things, we still get stuff the way we looked at it 20 years ago, and it's so broken. But anyway, going through all this stuff, we knew that on Monday it was going to be bad. So Tuesday, let's take I'm going to throw the chart up for a minute while I'm chatting with you, because it kind of clarifies some of this at the same time. Let me share this, pop this sideways here. Come on, bring this down a little bit. All right, so taking a look over here, looking at mortgage-backed securities. All right, Friday, here it was Friday. We'll use green because, of course, green is good, right? We were at our happiest place up here. Yay, mortgage-backed securities. They were at 100.50, right? 100.50 was where this 5.0 coupon was. Then we've come down. Monday, big drop. We knew that was going to be a thing, but we figured, let's wait and see. Could be an overreaction. Ron Siegel and I both said the same thing. Markets definitely overreact to news. However, then Tuesday things got a little bit worse and we were like, but they improved through the day. We started out really negative and then they improved through the day. And Wednesday, look at this, Wednesday, we were kind of improving And we started the day positive, but then we fell to be down a couple bips at the end of the day. And that was where things really got real for me. And I said, okay, this is not good. Yesterday was confirmation that we're going to continue to see things get worse. And then today is like a slap in the face with a wet fish. Because again, even though this jobs data came in super, super, super weak, we lost 92,000 jobs in February. Unemployment ticked to 4.4%. Looking at the Fed rate, Fed futures expectations of a Fed rate cut. Remember, we were at 97. Now it's like 95. It's like you saw a move here. We were at 85. Now you're at 81. If we compare, you'll see that visually here. Let me click compare, and there you go. So you can see yesterday we were higher, lost a little bit of ground here. When we go into like December, like we're getting a little bit better, but still look at where we were a week ago and where we're at now as far as where markets expect. This is one rate cut. Markets were expecting a lot more rate cuts a week ago. That was down here at 2.75. That's just not there anymore. So anyway, today's jobs data helped this outlook, but not enough to really matter. So you got Brent crude at 91.76 right now. They're saying oil could hit $100 a barrel, and it looks like it will next week. At least this indicator, this marker for it following that. So we also had retail sales today, which let's see, retail sales fell in January, fewer vehicle purchases. People are running out of money. Like you said, they're also running out of credit. So the estimate was for minus 0.3. It came in at 0.2. So it actually came in a little bit better than what was expected. But it's still lower, right? We know that. And let's see, what is CNBC saying? Dow falls 900 points after Trump comments spike oil. What did Trump say? And this is what we're going to see is market reactions back and forth to things. Trump said in a Truth Social post, there won't be a deal to end the U.S. war without an unconditional surrender from the Middle East. So this is, things like this are what are going to continue to drive this train. Donald Trump says no deal with Iran to end war without unconditional surrender. Again, I'm not into the politics. I'll even throw the thing up here so that I just feel it's always a good thing. I've got my own opinions on this stuff, and they're more complex. It's not a right or a wrong. You're certainly welcome to share how you feel about it. At the end of the day, I'm just focused on how it affects rates. Whether Trump's right, wrong, left or right on this, I don't care. However, market reactions to stuff like this just means that it's going to, that it's going to extend. This means that it could be an extended situation, which means continuing of increases, concerns over getting oil out of the area. Wall Street Journal had an interesting article. If I go back a thing here, Kuwait cuts oil production as storage fills up because they can't get it out of there because the Strait of Hormuz is closed. So that's the situation going on there. Brent crude tops $90 a barrel. Again, that's the ICE Brent that we're looking at there. Oil continued climb as conflict in Iran disrupted supply from the Middle East. Brent crude futures, that's the ICE Brent. The international benchmark rose above $90 a barrel early Friday before dropping back below that level, or they might be looking at the actual Brent price and not the ICE Brent. So either way, again, it doesn't matter which of these we look at. Shit's all going up, and it's going to bring rates with it. So let me know what else you guys say. Mike Tebow said, funny, a smaller drop in sales is good news. Retail sales dropped. Yeah. Sean Segelov said, investors are also pulling cash to be cash heavy to buy back in. We're hearing a lot more people doing sub 2 deals, which doesn't help us, but is a sign of the market. Yeah. So, all right, my friends. Well, let's talk some happy stuff. What are y'all doing? It's Friday. I'm going to go play poker tonight, have some fun. Hopefully I can clear out my sinuses a little bit so I am a little less congested, but I'll be playing some poker tomorrow. Got more stuff to do at my son's house, and hopefully put up the final coat of spackle. Maybe give it a quick sand so they could go ahead and paint that puppy up and get their bathroom moving so they can move in. And Sunday, we're taking the morning and going to pick up appliances for the kitchen. And once they have appliances, I'm thinking they'll probably move in next week. If their bathroom's working, if we get a toilet in there, I'm thinking next week they'll probably look to move in. And they're excited. They're really excited. So Tina Brumond is going to see high school rendition of Grease, the musical. That should be a lot of fun. There's a story that just is older than time. A tale as old as time, but that's not what Grease. But bada bada bop, shebang shebang. I remember that. That was the Grease thing. So hunt test weekend. Is that with the puppies? Hunt test. Are you taking them out? Is that with the dogs, Randy? Let me know what else you guys are doing this weekend. Always appreciate you being with me. So make sure you join me on Monday. Remember a few different things here. Go check out Grab and Go Social. $7 to get started. Absolutely need to be posting. We're going to be making some more content about all this stuff going on. I think a lot of LOs are asking us about it and about rates and different things. So I'm going to, we were focused on that for a while and then I got away from it. I think we'll get back to that. So go check that out. Also, don't forget to check out our text alerts, www.ratetextalerts.com. And as it says at the bottom of the screen, lock for protection. Yeah, Mike Tebow, I do use a real hammer. I'll have to take you down to my barn workshop downstairs sometime and virtually, of course, on the phone and show you all the tools that I have. So I'm quite the DIY guy. I'm a blue collar guy at heart. I may live in my white collar world, but I love working with my hands. I love fixing things. I love doing things. I love getting things done. So, all right, my friends. Well, thank you so much. I appreciate all of you, each and every one. I'll see you guys on Monday. And again, I'm sorry you're going through this. These are the cards that are dealt to us. A little poker analogy. And we got to make the most of it. So